I think we've bottomed.
For months, billions of dollars chased AI, while Bitcoin and Ethereum were left fighting for attention. Investors called it another crypto winter. Tom Lee thinks they're looking at it backwards, because according to him, almost everything that drove crypto lower had very little to do with crypto itself. And the number he puts on that argument is hard to ignore.
In crypto, when I looked at these cycles, I might say the attribution is 90% macro. So in other words, like the differentiation of narrative for Ethereum and how it compares to other projects is going to ultimately be only 10% of the return of ETH as an asset. And so for investors today, if they're talking about the price of ETH, then I'd say 90% of it's going to be we're in crypto spring. And even if you think it's crypto winter is over.
If Tom Lee is right, that changes how you read the entire sell-off. Weak prices don't automatically mean broken technology. Sometimes, capital simply has somewhere more exciting to go. And during this cycle, that somewhere was obvious. Lee admits that AI did something crypto couldn't compete with.
AI is such a compelling story, and it's making so much money for people. It's making money for institutional investors too, that it raises the bar for everything else. I mean, like, can you imagine imagine going to a meeting and one person wants to talk about AI stocks and the other guy wants to talk about, like apartment housing, like one guy's someone's not gonna pay attention to that second meeting. And so you're right. But when the AI story, as it evolves, it's important to think about the downstream stories. Because that's where you can misallocate. Many people thought software was dead, but software is a downstream story to AI. In fact, AI will benefit a lot of these companies, and that's why many of the software stocks are now starting to come back.
That's the contradiction. AI may have helped suppress crypto by winning the competition for capital. But Lee believes stopping there produces exactly the wrong conclusion. Because what happens when AI stops being crypto's competitor and becomes one of its customers?
Crypto is a very important downstream story to AI. The stronger AI gets, it doesn't make crypto less relevant. That's the key, right? In fact, the more AI evolves, the more important crypto is. So crypto is clearly a downstream story to AI. But from a timing perspective, I think you're right. As long as AI is done well, it's changed now, but earlier this year, no one cared about owning anything else. But now that's changing.
And that isn't just a crypto industry talking point. The financial system itself is already experimenting with putting money and assets onto programmable infrastructure. Stablecoins prove that dollars could move on-chain. Lee thinks that was only phase one.
The stablecoin story is still compounding because that's the tokenization of the dollar. And that's very important because it was a big unlock. Stablecoins are widely used outside the US, but there is a much, much larger market that's not dollar economy, but it's the movement of assets. And tokenization, to me, is so much bigger than stablecoins.
And now add autonomous machines. AI agents won't necessarily bank the way humans bank. They may buy computing power, exchange data, and settle millions of tiny transactions without ever opening a traditional banking app. That makes the next part of Lee's argument much more interesting.
But the AI world and an agentic world and an economy built on machine-to-machine transactions probably sees a lot less value in traditional financial settlement rails. And also the security of those. In fact, they're easier to exploit in that world. So to me, crypto is going to play a pretty big role in that world. And then layering on top the complexity of adding a real world environment, things that operate in the wild and managing microtransactions and instructions and taxation. It's possible this could be done on centralized systems, but why even I'd argue that's actually much more complicated than running these things on blockchain rails. So I think that there's a huge use case coming that makes crypto really relevant. So I think in the next crypto spring, if AI is now a $10 trillion economy, right? That's the TAM, but maybe it goes to, 100 trillion, is crypto going to be stuck at 1.5 trillion? I mean, I'm highly, highly doubtful of that. I think it's, it could end up being almost the same size as the AI addressable market.
But there is a difference between believing in a future and putting billions behind it. Bitmine has done the second, and its behavior during the downturn may be one of the clearest clues to what Lee actually believes.
Is that Bitmine has bought ETH every single week since the inception of the whole ETH treasury strategy. Not even Michael Saylor and Strategy have done that. Strategy has had many weeks where they haven't bought any Bitcoin and some weeks where they've sold Bitcoin. And so that's I think the most astounding thing is the consistency with the cash purchases. How are you able to do that?
Yeah, it has been over 60 weeks of continuous purchases of Ethereum. And we have throttled down the velocity of our purchases, partly in consultation with the foundation. We had spoken to them, and in the midst of this transition and sort of refocus, I think it would have not made sense for us to be viewed as a centralizing entity. So I think we've marching our way slowly to 5%, and we're at just about 5.82 million. I think we're 97% of the way there.
But owning infrastructure doesn't automatically mean its native token captures all the value. That's the uncomfortable question this thesis has to survive. Wall Street could use Ethereum without necessarily hoarding ETH, and the interviewers push Lee directly on that weakness.
I think there's another malaise in the crypto industry that despite all of that being true, our layer ones don't capture as much value as we previously thought that they did. And this I think goes to the story of just okay, maybe institutions are going to use Ether to deploy tokens on Ethereum, but they don't need that much of it. So how would you argue that actually institutions or people or investors are going to hoard Ether as opposed to simply just using having a supply of Ether to spend as gas? What would the narrative be? Is if we do think tokenization is coming, why would investors buy an incredible amount of Ether rather than just a utility amount of Ether?
There is this view people have, which is we like Ethereum, but we're not really sure ETH has value. ETH, the token, okay? And, that's a variation, by the way, of when the bank said, well, we believe in blockchains, but not crypto. Or we don't believe in Bitcoin, but we believe in blockchains. Do you remember how many intelligent people made that assertion? And then they'd say, well, come on, Tom, Bitcoin literally is just software. Anyone could fork it and recreate the chain. I could fork Bitcoin today and make my own Bitcoin. Why? And JP Morgan could make their own Bitcoin. Why would anyone use Bitcoin? Well, if someone had to bet their net worth on blockchains or Bitcoin as a narrative, the guys who bet on blockchain actually went bankrupt because they would have lost their net worth. And money, a huge amount of money was made owning Bitcoin.
Tom Lee's answer is essentially a network value argument, but it remains a bet. And that's where Bitcoin becomes useful as the comparison. Bitcoin already proved that a network's native scarce asset can become more valuable than the companies trying to recreate the network around it. Saylor took that idea one step further.
Since Michael Saylor started his Bitcoin treasury strategy, the stock has outperformed not only Bitcoin, but it's outperformed the broader market. So in a way, MicroStrategy today is as a common equity story has been a resounding success. Along the way, he has made evolutions to the strategy, including adding other instruments, and then really unveiling this vision of digital credit, and MicroStrategy being that intermediary layer between Bitcoin and capital markets. And he's trying to, and I understand his strategy, he's trying to monetize volatility as a component and then use that to turn part of the Bitcoin into a yield strategy, the right lens. So I think that he's kind of earned enough credibility that people should give him time. But as you know, all of this has also been taking place in the middle of a crypto winter. And I would say again, when prices are down, everyone starts to point to individual actions of a specific company. But in a larger respect, 90% of what's happened is really just macro.
So the Bitcoin and Ethereum trades aren't identical, but they may be responding to the same deeper force: capital searching for new forms of digital ownership while financial conditions shift underneath the market. And Lee goes much further than simply predicting a recovery.
Should ETH flip Bitcoin? I think it's a very plausible argument. So, that's, 15,000 ETH roughly. So in rough terms, that's a 10x for BitMine shareholders from here. So it's 180 a share. But shouldn't Bitcoin go up a lot? And shouldn't the TAM of tokenization and AI mean Ethereum's network value should be much, much higher? I think so. So then, where does ETH cap? If it's 50,000 or 100,000 or 200,000, the returns to our shareholders are going to be legendary. And I think that that's going to be how we get measured in 10 years.
Those numbers are speculative. The more immediate claim is much more useful. Lee thinks the bottom may already have happened. And for Bitcoin investors waiting for the perfect entry, his reasoning is worth hearing carefully.
I think we've bottomed. In fact, if you look at the past crypto cycles, the price print low wasn't exactly following the 1,064 days of Bitcoin. So, but there was a local low. So I think it's very possible Bitcoin's made its local low already. And then there's just a new local low, but it's not lower than the current low. And then in retrospect, everyone will say, oh yeah, because you had to do it S&P 500 adjusted. And, and that's a possibility. Or it'll be NASDAQ, the Bitcoin NASDAQ ratio is actually the low. So the answer is, I think if we're 90% of the way through the bottom on both time, let's say we're 95% on time and 90% on price, I'd say unless you're really a genius, it's buying it here is actually going to be at a better price point than trying to buy it 1 month into the low.
That's the real wager. Not that every prediction comes true. Not that Ethereum automatically wins tokenization. And not that AI guarantees another crypto bull market. It's that investors may still be analyzing yesterday's weakness while capital is already beginning to price tomorrow's opportunity. And Lee puts a number on where he thinks that could eventually take Ethereum.
Just being in a new bull cycle means Ethereum should be above 5,000, but then what do we layer in on Wall Street tokenizing plus AI? So I think Ethereum could easily be over 10,000 in that time frame.